Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. April 30th, along with our President and CEO, John Mousseau, who manages our fixed income trading and portfolio management effort. John and I, when we first started these videos a couple of years ago, used to do the video together. COVID split us up into separate videos. Now that we're fully vaccinated and back in action, we're back to doing the videos together. We think by adding some questions to each other and comments while we discuss markets, it can be more transparent and add some different ideas that maybe clients and friends are thinking about on their own end. Equity markets this week, without looking under the hood, very quiet, very flat. Under the hood, what have we been talking about all year? That rotation from sector to sector. Energy and banks, very solid this week. You know, go back to election time, November, December, where the buzzwords we kept hearing, right, were solar, ESG, wind, and as you know, we have positions there and have done well. Took a little off the table, still have positions there. Would have been a very tough bet on December 31st to say the trade of the year was to be short solar, wind, and they throw water in there, but to a lesser extent, and long old man energy, the old traditional names. Bam! That's what the market was looking for. Just goes to show that different technologies, different stocks, different fixed income, commodities get priced in and then have to reset. So that's what we're seeing right now. We had that horrible traditional energy sell-off for 3 years. Finally got priced in. Happened to coincide with negative oil prices, if you recall that, in that crazy time last year. But anyway, flattish indexes, strong energy, strong banks, feel like we're positioned well. We have a little bit of cash in each of our equity strategies, looking for pullbacks, looking for reasonable entry points. John, what did you see in fixed income?
Also kind of a quiet week, Matt, but sudden small migration up in yields. And I think part of it is just the backdrop that we saw of really good earnings on a lot of fronts on companies. And I think that reinforces the fact that normalcy continues to return. So if you look at the 10-year bond, 163 up 7 ticks. You look at the 30-year bond, 230, also up 7 ticks. Muni yields up about the same. Backdrop to this, a couple of graphs we're going to show you. Initial jobless claims, you see the trend continue to go lower, down 550,000. The key to that is that it continues to move to lower levels. Not that that's good, we should have lower initial jobless claims, but it's moving in the right direction. Also, quarter over quarter GDP up 6.4% in the first quarter. That probably gets revised upward. Very important though, that is a number, a 6% number that we did not have pre-COVID for many, many years for a quarter. We know we had the big downdraft of the 30% down quarter, and we had the big updraft of the 30% up quarter. Remember, that does not offset each other because of percentages, but you are well on the way to getting GDP at a level where you were pre-COVID. And that's a good sign, and I think the bond markets are starting to reflect that.
Yeah, John, with new money coming into bond accounts, let's say a new bond account, whether it's taxable or muni, or additions to bond accounts, how are you treating that new money?
It's a good question, Matt. New money coming in is getting deployed defensively. So think about a barbell, and more on the shorter end, a little bit on the longer end because of the steepness of the yield curve, realizing that, look, over time, higher interest rates do lead to somewhat declining prices, but to the extent you have some additional coupon income offsetting some of that short-term ammunition. And I think the key there is to have the short-term ammunition, because the one thing that we've continued to talk about is where we haven't seen a migration up in inflation, it's still early in the year. And we know that with the economy rebounding and coming out and vaccines becoming much more prevalent, there's a very good chance that we will see upwards of spending and perhaps an increase in inflation expectations. And as we've talked about a lot, inflation expectations tend to drive the bond market more than inflation does.
Right. Good points. Good
Yeah.
points. Well, great. Everybody knows or should know it's Derby weekend. John and I are horse racing fans. We're each going to give our Derby pick. Nobody likes to go with the favorite essential quality. When you see some of those Derby odds, you always get a little bit greedy, although he's a great horse trained by an outstanding trainer. John, who's your pick this year?
Matt, I like Midnight Bourbon. I'm always attracted to horses that have in their lineage horses like AP Indy and Seattle Slew. Takes me back to the days of my youth.
Absolutely. I will go with Known Agenda. He was the Florida Derby winner. Irad Ortiz will be on his back. Outstanding jockey. A little bit nervous that he pulled the one hole, which is a tricky gate to leave from. But one thing's for sure, we'll have a lot of fun. There's a lot of great racing that day. Good luck to anybody playing, and we will touch base next week.
See ya.